Hello guys, good morning. Today is Thursday, July 14th. I'm going to be going over to this price action, trying to explain a little bit of why I bought and sold today, and doing the resume in the meantime, which is what I tend to do around these times, basically after the AM session, the morning, or New York Hill Zone. And let's just get right into it. As I said, we basically got opportunities to buy and to sell today, mostly to buy, because we didn't really have much opportunity to sell, which was a little bit of a problem per se, but at the same time we did get the chances to buy, and we had somewhat of clear reasons. It could have been a bit difficult, to be fully honest, due to something we'll discuss. But yeah, let me just do the usual stuff. Where's my, here it is. So for the screenshots, I was playing this since I'll do it anyways. For the screenshots, I like having everything as neat as possible, right? And what I mean with that is that I want to have a clear chart to be able to see the price if I desire to look at it later on. If I decide to go back and analyze whatever happened in that screenshot that might be worth for me. So I do want to have the charts as clean as possible. And at the same time, sometimes this, as an example, this is, in my opinion, a clean chart. Then now I can try and annotate stuff in around this area, or even here, whatever I desired to do that, and would allow me to have a good understanding of what I thought of in the moment, or what I wanted to show with this screenshot later on, right? So basically explaining what I see. So we'll begin with midnight. Midnight open here, traded lower, sweeping sell side liquidity, traded higher, sweeping buy side liquidity, retraced, mitigated a 15-minute order block here, and a fair value gap up there. Sorry, my mic was a little bit far. Hopefully that'll be better. So we could have looked for buys and sells during London. We do see a little bit of a move lower that creates a sweeps buy sell side liquidity. Let me actually see if we could have found an entry on that. Not really, because it does sweep the liquidity, which is something that I will wait for before looking for entries. But there was no fair value gap here until this one, and that is traded later into this. So it would have been a bit of a difficult London kill zone. I don't really look nor analyze. I don't really find it that interesting, the London kill zone, at least for what I've seen. It doesn't really move much. Sometimes it does, but it doesn't do it in a clear way. Or maybe I'm just too accustomed, or how do you say this? I'm too used to New York kill zone, which makes me understand it a little bit easier compared to other sell sessions or kill zones, such as the London one, right? So yeah, based on London and midnight, in my opinion, we could have expected a bearish day because of this, mostly the pre-New York phase, because it swept liquidity multiple times, and then we see the aggression lower. So as an example, I would have liked phase one to mitigate that, or something that could tell us price could continue to go lower after that. But price basically ranged during, well, what I consider phase one, which is between 7 and 8:30. And then we didn't really have anything to, not anything, but we didn't really have much to buy or sell from. But I did manage, just an example, sell from here, right? And this is where I closed everything. So basically took advantage of almost this entire bearish candle, right? And then I bought back here, which we'll discuss, and closed a bit here. Closed a bit. Oh, I actually tried to take a sell. We'll talk about that as well. Bought here, sold a little bit here, and the rest here, because I think it was a 5-minute fair value gap that we had in here that we'll discuss later when we're doing the resume. Yeah, that's fine. Okay, so I'm gonna explain what I see. Can I do it from the 5? I do it from the 5, don't I? Yeah. It's a bit lost on that. And we'll just use this, because that's fine. Honestly, this would have been my my peak target, because this high built a lot of liquidity due to it causing such a strong impulse. So I would have expected that high to be taken, just didn't really want to target that, to be honest. We need to zoom out a little bit more, and that should be fine. Not much else to add on that one, honestly. I don't think I would have taken advantage of anything here, although, again, in here in the 1 minute, it mitigates the fair value gap that we talked about here. So that could have caused reactions here that we could have taken advantage of. And being fair, this is probably what we would have targeted, which is the next high that just basically left pending sell side, or sorry, buy side liquidity. So let's go for pre-New York. Continued with the London trend, basically, and of course run on that sell side, or that buy side. Okay, and I could explain session on this little box here. I think I'm gonna skip that. Yeah, I'm gonna skip that. We're just gonna take this screenshots, go to here. Oh, I thought I had done this already. My bad. I was already on editing mode. Okay, it's Thursday 14th. Why current view editing? Oh, okay, so I can now do that. Oh, so this was updated. That's great. So midnight in London, analyzed on picture. Session screenshot, we'll get into that now. Let me actually do that. And we can delete this now, because we're not really going to be using it that much. So there's some things that are very, very tiny in here that are basically something that I do want to get into. Yeah, we'll do two screenshots. So we have this first, near a kill zone, up to 11 a.m. We'll do it like this, right in the middle. So when session opened, okay, hold on. Let's go phase 1 first. Okay, and we'll put that to 12. Yeah, it's fine. So that's phase 1. Which we'll leave here, which is up to this. We could do something like this as well if we desire that. If we desire to do that. Yeah. Nah, I'm not gonna do that. It's weird. So this is where we are. Now, phase 2, what happened is a bit interesting. The reason why I managed to sell from here, we'll get into detail later on the 1 minute on the sell. But the thing is that you can see how session opens, right? Opens at this level, goes higher, and when we check the 1 minute, you'll see how, let's actually do that now. You see how the 1 minute candle, so it opens here, right? This is 8:30, trades a bit lower, aggressively higher. It sweeps a lot of liquidity, and then we see aggression lower. So I was looking for sells here, but we never really got any clear fair value gap. We actually never really got any fair value gap. Maybe in the 2 minute, we could check that as well, though I'm not really interested in getting into too much detail in it. Yeah, as you can see here, so this is the 8:30 open. There's a fair value gap here. The price trades into here. Stop loss should have been at least about this high. Better or safer up here, and well, target would have been very hard to choose, because if we can even go to weekly, daily, we don't have anything close. to choose as a target, right? So that would have been a bit difficult, right? Because well, I can go pretty far to the left. There's not much to do here, right? So we have the 2001 low, 2000 low at 0.82. But of course, we would never target something that far. We're talking about 1,000 pips, I think, if I'm making the, or 10,000 pips? No, 1,000 pips, if I'm making the maths right. So yeah, really nothing for us to choose as a target. But on the sell, I just went for 5R, and as we did have a really good aggression on it, I was very pleased to do that. So yeah. Phase 1, price didn't move much, basically ranged, although there are tiny runs on BSL in the lower time frames which could have been considered bearish, but nothing as clear as we'd like to see. Okay, session opens, trades aggressively higher. Okay, that should summarize what I was expecting during session. And okay, again, one more aggression. Okay, I think that's good enough to explain that specifically. We'll call it that, yeah. Okay, so what happens, this was a little bit complicated for me because as an example, I ended up avoiding this this trade on my challenge account because what is it that we really have? So, or what we would really look for. What I like looking for during the session, during the open, during the beginning of New York Kill Zone, I want to see a high or a low being taken, right? So run on sell side liquidity or buy side liquidity. Then displacement lower or higher, right? So as an example, if buy side liquidity is taken, I want to see displacement lower. If sell side is taken, I want to see displacement higher on the 5 minute at the very least, to then look for entries in the 1 minute when it trades inside a 5 minute fair value gap. All right, so as an example, in this case, we have this fair value gap. The thing is that what sell side are we really taking here? Do we have a displacement? We definitely do, right? But we don't really sweep any kind of liquidity close, because if we look at the 5 minute, what is it that we have? We don't have anything here that price is sweeping, but what has been swept is this. And in my opinion, I just didn't really think of it on this way, because if you think about it, of course the one level, the 1.0000, right? It's a pretty important level that has a lot of liquidity, because people believe that if that level is broken, then we're likely going to go lower, or if that level is respected, we're likely to go higher, right? Many people used it as basically support and resistance. When it broke down, it's resistance. When it didn't break it, it's support, right? Or the other way around. I don't really remember the directions. So there's a lot of liquidity that has just been swept. And what is it that we see price do? Create displacement in the 5 minute. So what is that we do? Well, we go into the lower time frames and we expect price to do the exact same thing. So in the 1 minute, to create displacement, if a market shift happens, better. If a sell side liquidity is run into on the 1 minute, again, even better. Those are just extra confluences, which if we find, then great. If we don't, it's not that it could break. It's not a deal breaker. It's not that if we don't see the 1 minute sweeping liquidity, we're not going to take this trade, right? Because in my opinion, the run on sell side liquidity in this case was already done in the 5 minutes. So the 1 minute not creating that was not really that bad for me. So that was the difficult thing on the buying. On the selling, it wasn't that difficult because we did have reasons to sell. We had the one level being respected, and they run a bit buy side, which creates displacement only in the 1 minute. I will admit to that. Reason why I didn't go for this on my Forex Funds account. But at the end of the day, we did have that, right? We did have that. So okay, difficult scenario here. We'll do it like this. Okay, so we have this, which is 5-minute fair value gap. Sucks. That's there. And that's all that we're looking for, right? Yes. Yeah. Is that all that I needed from this? Yeah, because we will explain the entries later. Yeah. Oh, and there was also an entry here. Let me actually do that. Because there was an entry there that would have worked, even though you can see this retracement here. It would have worked. Lovely enough, would have worked. I was looking at it when it was already happening. Of course, at this time I was not trading anymore. And I saw that being respected, and I was like, oh, that could work. Okay, that's it. So, midnight in London, analyze some picture session screenshot with the explanation. Great. So what did phase 1 do? Basically just phase 2, run against the trend, run and BSL, displacement lower without FPGs in 5 nor 1 traits. Now we get into that. So now trade number 1, we'll delete this things because we don't need that anymore, and we're going to need this. Actually, let's do trade number 1 here. So this is what I wanted to talk about, because as you can see, what is it that we have? Also, now let's actually draw that 2-minute fair value gap that we saw, because I think it will be important for the analysis. Okay, so yeah, so what is it that we see? Price is ranging, right? This move here takes a high, now we see aggression lower, price respects this, we see price ranging, respecting what? Well, we have the big number here, sorry, not vertical. Price is just slowing down, but still respecting this high, which took buy side liquidity, continues to range, creates many highs being respected, aggression higher as soon as the session begins, then a little bit of a range, aggression lower, generates fair value gaps. What is that we have here? Basically, we have a range, price swap that, went lower, range, same range in my opinion, exactly same range, aggression higher. So I was just expecting the continuation, the very continuation of this. Right, that's the reason why I ended up selling. So that's what I want to explain somehow on the picture. So we'll do it from here. See a lot of highs being respected there. Let's actually zoom in a bit more. And this also to the left. Well, we actually do know that already. Okay, and aggression lower, fair value gap trace into that, aggression lower. This would have been, this is what I was actually expecting. Then I traded into this, and I don't really remember where I ended up selling because I was on my phone. Was I on my phone? I think it was. And stop loss up here. Is that good enough? Yes. So how do we explain it? session manipulation, run on BSL. Got 1 minute run on BSL, mitigation of 2 minute FVG, session open. Remember, and placement lower, 1 minute fair value gap execution. Let me see specifically where I trigger the entry. Okay, so I sold on this candle, knowing that this was already existing. Well, I don't know if existing is the word, but I knew that this fair value gap was there. So for me, so here's the thing. If we're willing to take a trade when price creates a fair value gap, of course that fair value gap has to happen somewhere. It's not that we are going to trade any fair value gap that comes into hand, because there's a fair value gap here. There's a fair value gap. Come on, show me one more. And a tiny one there, not good enough. There's a fair value gap here. We're not going to buy from there. Why? Well, we could have considered buying due to the sweeps on liquidity, but we don't really have any higher time frame reasons to do that, right? So for me, it doesn't make sense to be buying from here. On the other hand, this displacement here, this fair value gap, is good enough due to the fact that it mitigates a 2 minute fair value gap, respects this entire structure that basically swept a lot of buy side liquidity as well, manipulation on the session open, and well, session run into buy side liquidity as well. So in my opinion, that was a pretty good opportunity that could have worked out, and well, ended up working out. And my stop loss was up here due to this being there just in case, you know. So yeah, we can delete this right now. Yeah, okay. Targeting 5 bars. There's nothing to the left. I wouldn't say there's nothing, but you know, there's basically nothing. Trade number 2. This is going to be a bit complicated. So we know where this is. We have the 5 minute fair value gap. That's good enough. We could do the other one as well, can't we? Yeah, sure, let's do that. This is the trade number 2. As you can see right here, I try to sell from there due to the 5 minute fair value gap. So we have a 15 minute fair value gap. Price trades into that. 5 minute generates displacement, which generates a fair value gap. Stop loss above the high. That's the sell. Very low risk, as you can see. I think it was a 0.5% risk. Ranged. Saw this fair value gap, so I sold here. So that should be the open of the fair value gap, I assume, on the 5 minute. And then I saw this and said, well, I'm going to set a limit order. If it mitigates that, I'm definitely interested in it. And I think this one ended in probably in a break even, a little bit less than a break even. And then this started going higher. So target was above this high, if I remember correctly. Yeah. We'll discuss about it now in a sec. I said I can put both of them, yeah. So this will be, in my opinion, well, it's already a phase 3, but it's not following the trend based by phase 1 and 2. We're not gonna say that then. We're not gonna mention it. Doesn't really matter that much. And then there's this fair value gap that I would have not traded, to be fully honest. But definitely works out, as you can see. So I have this tiny bit of an entry here. Talking about 34 actually, ticks of stop loss. And this one, obviously keep in mind that as they are based on, my entry was, I don't know, it was 42, yeah, that's fine. as they are based in a 5-minute fair value gap, the stop loss under the 5-minute structure is going to be much better, because this could have failed, run on sell side liquidity on the 1 minute, market shift, displacement on the 1 minute, and then a potential entry on one of those fair value gaps, which with a safer stop loss per se. So that could have happened, and well, there's nothing that we could have actually done about that, you know. So it is what it is. Targets, I was thinking about this high liquidity. Being fully honest, again, I targeted this, but with this trade, I would have definitely have to go a bit higher than that. I don't remember if it was this high or the other one. Let's just use this one. It was this one, I think. Keep in mind that I closed everything again above this high, as it was a 5-minute fair value gap bearish. 5 minute. And trade 1 and 2 then. Oh, sorry, trade 2 and 3. So trade 2 is 5-minute run on sell side, 5-minute displacement, 5-minute fair value gap mitigation, 1 minute displacement, 1 minute fair value gap execution. Simple as that. We're not gonna add much more than that. There's a tiny bit of liquidity below there. Don't really think that's worth mentioning. Trade 2 is that, and trade number 3 will be phase 3 FPG, 5-minute FPG. And that's pretty much it. I mean, price trades into that. So yeah, that's pretty much it. 1 minute displacement, 1 minute fair value gap execution. That's really all that I can say about that one. Trade 2 would have been on that way 11.48. 11.48 R. And should check this one, 8.21 on the second. 8.21 R. And first was 5 R, right? Yeah. Sorry, that's not the one. And let's put this. My bad. There it is. So trades number 1 is this screenshot. Number 2 and 3, this screenshot. That's great. Target. Let's actually show target as well. Yeah, this was the high. Pending buy side liquidity. Pending buy side. This is a little bit of poor screenshot, that's fine. Okay, that's it. And in conclusion, what can we say? I think I'm gonna do this alone. Yeah, that's really pretty much it. It was a interesting day, because as an example, I don't remember if it was yesterday. We did have something similar to that. Yeah, on this, isn't it? Yeah. We had a buy here, so you can see this 5-minute fair value gap, right? It's basically exactly like the previous one. And on the 1 minute, we get an entry, which is mitigated on this candle, I believe. This black candle here, which retraces into this one. And then price retraces. Low is still being respected. And well, target would have been above this high, which is somewhat really similar to what we have here. Overall, we can try and... yeah, I don't really like the way that one turned out, but that's fine. So we can compare it, because it's pretty much... That's fine. I'm actually redo it, because this is a pretty good example of how the pattern should repeat over and over. But the problem that I have with something like this, see how the drop in this case just went a little bit more aggressive in this one. But basically, what is it that we really have? We have run on buy side, aggression lower. Again, this one happened at 8:30. I think A30 was a little bit before this. Aggression higher against the move. Have fair value gap in the 5, fair value gap in the 5, 1 minute entry, 1 minute entry, target above the high, target above the high. Both would have worked out just fine. Yesterday I didn't trade this, but here, look at this. We have many confluences on this day, so yesterday, compared to today. Because we have the 0 level here. And we have this to the left. We have a pretty close level that has just been broken, and immediately we see that displacement in the 5 minute. In my opinion, there is a big difference between this that had something recent compared to what we had today. I do still consider that the one level is recent and the liquidity created on it is recent, but this run into the liquidity, which is at this level approximately, run into it or run past it basically, and then immediately creates that reaction. Today, on the other hand, we had the liquidity here. It run lower, right? And then we see this. So in my opinion, there's a big difference about that, which is kind of what confused me today. But yeah, and again, here you can see how that, that's a funny. That was this everything that we've seen. All of these reactions were clearly liquidity. I mean, the one level is obviously something very psychological for obvious reasons. So people using it as support and resistance. There was a lot of sells below this low. Then there were a lot of buys above this level, basically, or above this level, whatever you want to choose. So a lot of liquidity was pending here, and that's the reason why this happened. That's the reason why that happened. Okay, so that's pretty much it. Hope you enjoyed this video. Today was really fun. What is it that I look for? Let me actually do that, because I do want to make a video about what do I look for with ICT's concepts, which is from his mentorship on YouTube. What I do is so I want to see 5 minute run on stops, so either run on buy side or sell side liquidity. Then I want to see the 5 minute again create a immediate displacement. Lower time frames trade into 5 minute fair value gaps. Lower time frame displacement. Lower time frame execution. That's literally what I wait for. What is it that I add to it? Direction from the daily, the weekly, right? So as an example, I was expecting a bearish week because of the why was I waiting for a bearish week? Let's go to the daily. There's this explanation here. I was expecting bearish probably due to this, due to how price has been going lower. But I can't really say this much more recent than that, to be fully honest. There's an explanation here if you want to read it. This is my week's forecast, which do have screenshotted, but I did expect a little bit of a move higher before actually moving lower. The thing is that besides from that, I do like looking at the phase 1, so 7 to 830, phase 2 830 to 930, and phase 3 930 all the way up to 11, because of the sometimes. So how can I determine a direction for the day? As an example, the reason why I was expecting a bearish direction is this: high being swept, immediate aggression lower, right? And market shift as well. And session, we were just honestly sweeping liquidity higher. Reason why it sold from here. Reason why we can buy from down there, well, honestly, just because of the 5 minute displacement. That would have been more than enough. But also we can consider that the level 1.0 was swept aggressively, and a lot of liquidity was taken from there. So yeah, this does make sense. Although again, for me, it was a bit confusing to try and buy from down there, but I ended up doing it, so that's fine. And that's really pretty much it. I've seen a lot of new people coming around, which I'm really grateful for. All of my teachings currently are being done through YouTube. So this videos that I'm uploading on ICT. And again, it's not really that much teaching. It's just showing my perspective, or the way that I've applied the concepts that ICT has taught through his mentorship on YouTube. And my private course, which I'm not really uploading much content there. I haven't uploaded in a while, because that strategy still works. I've actually been back testing it a little bit on the past few weeks, and we have had some trades, but I just seen what ICT's strategies is able to do within a day or within even just a week, which you just don't really need much to happen because it's something that happens very often. It's much different compared to what I used to use. And again, strategy still works. It's there, but I've just decided to change it because it's just a lot better, my opinion, right? A lot better. So I do have my teachings on YouTube as well, previous videos, old videos. But yeah, that's really all that I want to talk about on here. I hope you enjoyed. I hope you learned something from this, and I'll be seeing you on to our next one.